Welcome to Bay Area Housing Market. And I am so excited and also sad because this is our last Bay Area Housing Market update for year 2020. And before you start, I hope that you guys can subscribe to my channel and also like my video at the end. I have spent a lot of time to gather all the research and all the statistics, but most importantly, I really wanted to show you guys some of our real life case studies, what is going on with these offers that we're making. So I hope you'll enjoy this episode and I'll see you next year. So let me go ahead and start with our housing market update. There are, again, tons of information and we want to know what is going on with our Bay Area housing market, right? Let's start with the 5 MLS counties that we collected the data since July and now to November. And as you can see that now new listings, we are still have a lot more compared to last year. So especially November, we have 63%. Typically by end of the year, especially in November, our listings typically come down because of the holidays. But this year, again, we have a very unusual year. So in November, we still have a lot of listings that coming out. And same thing for the properties that gone under contract. And you can see that most of the properties, they have changed to pending. The difference between pending and contingency is that pending is like there's no contingency in the offer. So basically buyers like, I'm committed, I'm buying this property. So as you see that it has changed quite drastically again from 2019 number. And then closed sales, we have 20% more, almost 20% more than last year. And here is some of the chart that I want to share with you. This is from 2017 to 2020. This is based on Santa Clara County only and on the single family residence size, meaning it's detached homes. So if you look at 2018, I thought it's kind of interesting because if you look at the active number of sales here, it drops down in 2018 and then, but it's again, is very normal. At the end of the year, it drops and then it comes back up in 2018, right? So if you guys remember 2018, we had a lot of sales and the price had gone up quite significantly also right here in the beginning of the year. And then towards the end in 2019, this is when again, our inventory dropped and then it comes back up. But the price actually had gone down. It actually didn't go up. The activity, if you remember, 2019 was actually really slow. Funniest thing is that I remember sitting in my open houses talking to a lot of buyers. All these buyers were telling me the same thing. So many buyers told me the same thing. Oh, we're going to wait until 2020 when the market crashed. So now let's look at what happened in 2020. In 2020, again, end of the year, the inventory went down. The inventory started picking up, but the price, instead of crashing, it just shot right up. So this is where we're seeing that right before COVID happened, our price had gone up. And then even after COVID, the price did not drop significantly, but rather it actually continued to go, stay pretty strong and still high compared to 2019. So if you look at over here, same thing, 2018, we are looking at the sales price over the list price. So we see how competitive this market is and also number of days on the market. And then in 2018, again, we were bidding 12% over asking price. And the properties are on the market less than 10 days in Santa Clara County. And 2019 is just dropped to people are offering around asking price. People are not really bidding as strong anymore until January it shot back up again. And of course, after COVID, although we have like a drop where there's no showings, but we were still slightly above 100%, believe it or not, during that time. And then as soon as the showing market opened up, we continue to go up to about 4%. All right. So also want to share with you guys over here, Facebook. Today, there's a news talking about Facebook plans to invest another $150 million to build 2,000 homes for a low-income resident in the San Francisco Bay Area market. As you know, that our price has gone up because we just don't have enough inventory. So Facebook has dedicated 150. Actually, they are dedicated a lot more than $150 million, but then they want to dedicate this amount of money to build 2,000 homes for low-income residents, which include, I believe, 1/3 is going to be in Santa Clara County. All right, so here we are comparing these two last month and this month. In Santa Clara County, if you look at the single family, the last month, we saw that there were a lot more closed sales. This month, we actually dropped a little bit, but again, compared to last year, it's 33.6% more. While townhomes, we are closing about 18.2% more. But compared to last month, though, we did drop, but obviously it's very normal since it's November, definitely going to drop a little bit, but it's just that if we compare to a normal market like last year, we still have quite a bit of inventory. And the median price did go down a little bit for a single family home. It went to 1.3855, but then the condo prices actually went up a little bit to 839,000. And again, if you compare to a year ago, single family had gone up 10%, and condo and town have gone up 6% in price. And then the average days on the market. Average days on the market, look at October and November. October was 22 days. November, we had 19 days, and both have slightly less, actually selling it faster than last year. A year ago, we actually was 2019, we mentioned just now, a slower market, and it was 37 days and 42 days last year. So that's a big difference compared last year and this year. And what about San Mateo County? San Mateo County, we do see that the pricing have been coming down month over month for the past few months. And this month it went down again to 1.65 million for the median sales price for single family. And then it stayed on the market a little bit longer. It's 27 days instead of 22 days last month. And it had less property listed. As for the condo, it also dropped a little bit. Again, the days on the market is a bit longer, and it also have less properties listed on the market as well. So it's interesting also because typically if you have less inventory, you should have a higher price, right? But here we actually see a little bit less than last month, but then the pricing also came down and it stays on the market a bit longer. And East Bay, I usually have all these data with every single city, but like they don't have the numbers out yet. So I just got some information from Bay East Association Realtors. They were kind enough just to give me like a really big picture, just to let everybody know that, okay, in November 2019, home for sale down, and there was a double-digit price increase across East Bay. Average days on the market is 18, is actually significantly better than San Mateo County, and the pending sales is up from November 2019 as well. So because I wasn't able to give you a lot of information, I thought, why not give you guys, you know, the actual offer competition, you know, in our battleground, what's going on. We handpicked just a few properties for you guys to see, so you guys can get an idea how competitive this market is. So just give you, again, here, this is not everything that we have made an offer on, but I thought these are some notable ones that we should share with you guys. Like in Saratoga, which is in the Santa Clara County, single family, they are fixer. One was asking $1.8 million, another one was asking 1.3. $1.8 million one fixer got 60 plus offers and went way, I mean, we don't even know the price, but the agent, all she said was like way above $2.1 million, 60 offers. And then this one is even crazier, right? Obviously $1.3 million asking price in Saratoga is very, very low. And this is a probate sale, and they had 501 disclosures downloaded. That's how many people are looking to buy in Saratoga. So we thought these two are just like blow our minds away. It's like, oh my gosh, that's a lot of people trying to bid. Imagine one person buy this property and 59 other people don't get this property. And then what about East San Jose? Same thing, single family, asking price $799. They got 32 offers. And then there were 7 offers above $900,000. We don't know what it's going for at this point because this just went under contract. Union City, single family, asking was $975. They got 17 offers, accepted something at 1.14. San Leandro, these are East Bay, single family, again, $858,000 asking price. They got 14 offers and went over $1 million in San Leandro. And then Fremont, again, this is single family, asking $998, received 13 offers, close, and then it accepted something close to $1.2 million. Now, what about multifamily? Stockton, 15 units, asking $1.6 million. Didn't get any offer. So we submitted something and then offered at 1.4, seller counter back at 1.55. This is just an example we've been talking about, is that buyers for multifamily right now, or investors, they're very careful when they make an offer. They want to be very conservative, but then the seller are very much sticking with their number. So there is definitely a gap right now between what buyers want and what sellers want in the multifamily market. So I thought this would be quite interesting for some of you to look at, because these are real cases, like real offers that we help some of our clients to make just in the past few weeks. All right. So let's look at what Realtor.com they are saying. If some of you are saying, like, I'm trying to look for a market to invest in, and here is a top 10 housing market that Danielle Hale, chief economist for Realtor.com, had recommended. Surprisingly, 2 of them is in California, even though so many people are talking about the price has gone up so much, it's too crazy. But look at that, number 1, Sacramento. That's what she's recommending because she believes that 2021 is going to continue to go up. San Jose, the Silicon Valley, 10.8%. Charlotte, 13.8%, etc. So these are the markets that, Realtor.com, the chief economist, is recommending, saying that these are great markets to position for growth. So we are absolutely excited to hear that in San Jose, Sunnyvale, Santa Clara area, we are still one of the strongest market. Now, what about the loan situation? Our loan has been, the mortgage rate has been going, staying pretty low at 2.875 for a jumbo loan for 30 years fixed in Santa Clara County. And again, we know that sometimes we have clients saying that, oh, we got some quotes at very low. Be sure the first question to ask is, what is your APR? Because they can be charging you a lot of fees. And then when APR is your rate plus your some of the fees that they charge for the interest rate, and that actually determines how much it is. We have seen something that is like, so this is 2.875, APR is 2.921. But if someone else offers you like 2.5 and the APR is like 2.95, then it's actually more expensive than this one. So just want to make sure that everybody understand, when you get a quote from a loan officer, make sure to ask about the fees or the APR. All right, so is the housing going to crash in 2021? I know I just talked about what Realtor.com had predicted or mentioned what are the great housing markets, but I know, people I see everywhere, YouTube keep talking about there's going to be housing crash in 2021. So I don't know how many of you have experienced that 2008 market. And I thought about it. I was like, wow, that's actually 12 years ago. But to me, it feels like it just happened. At the time, I remember I was very shocked about the foreclosures. Look at this article in 2009. It says that the foreclosures was up a record of 81%. I was already in the real estate industry, and I can tell you at that time, almost 100% of my deals at that time, they were either foreclosures, pre-foreclosures, or short sale. Rarely ever we would see anything is like a regular sale on the market. So that was how bad it was at the time. And if you look at this is saying that there were more than 3.1 million foreclosure filings issued in 2008. So how does it compare to what our market is right now? Let's take a look at this. This is from Black Knight and from October 2020. And then you'll see that this is like 2008 to 2012 during that recession. And if you see the total non-current is maybe average about 6 million non-current loan files during that time out of the about 50 something loans on the market. So that's quite a bit. And then if you look at where we are right now, we are still about 53 million loans, and we have 3.6 million non-current loan as of October 31st. So I thought that was quite interesting. And then if you look at right before the COVID, February 29th, we had about almost 2 million, which is really low. Look, we are pretty much lowest compared to any other years besides, I guess, like January 2020. We have very few relatively speaking, non-current loan files on the market. And so I am not saying that we are doing really good. I'm saying that we have increased on the non-current loan files. Definitely, we definitely had gone up quite a bit compared to pre-COVID. But then if we go back to look at 2008 to 2012, that kind of foreclosure, which was the main reason why our market crashed, we are not nearly as much as that time. However, we do have a lot of forbearance on the market right now. So would like to share with you in the next graph is that here are the national delinquency rates. So meaning that people are not paying for their mortgage and they are delinquent. And we did shoot up to quite a bit. And then we came back down to 6.44%. This is our average 4.54. So we are definitely high. And we are actually just, we are falling to their lowest level since March though. And I want to also show you this graph this chart by Black Knight. First look at the October mortgage performance data. And this was September. I shared with you this chart last month. And then now this month for October, you see that the change in delinquency rate continued to have gone down. And the serious delinquency rate has also gone down by another 64,000 files. And the prepayment rate, people are actually paying, come back and pay because like they went into forbearance and now they're coming back to pay for their mortgage payments. So now it's gone up, last month gone up 12.7, and this one continued to go up. Sorry, not this month, but October went up again for 4.13%. And now we know the national level, and let's take a look at which areas have the highest delinquency rate. And of course, for us, we're the most interested in California. And as you see that California, these green dots, meaning that they are below national average. And so if you look at the 10 markets with the largest delinquency rate, they are Las Vegas, Miami, tons of Florida here, and Texas, Louisiana, New York. And then the best or the smallest delinquency rate is actually, look at that, San Jose. San Jose is number 49 out of 50. So we are really not, we're not doing that bad at all. And we see that Detroit has seen actually the greatest improvement with 46% of COVID-related delinquency increases already being erased. And the California-wise, we actually see Sacramento, Riverside, and San Diego have the strongest improvement. So that nationally, our recovery rate is actually about 30%. While Las Vegas, again, they are getting hit the hardest, one of the nation's highest in employment, and they are about 6.3% of borrowers still past due on payment, while markets in Florida, Texas, and Northeast continue to experience the heaviest impacts from mortgage performance. And what about these foreclosures now? Just remember, forbearance is not does not equal to foreclosure. Forbearance, you're still negotiating with the bank, and the bank has not foreclosed on you yet. So some of our clients started to ask us, "Oh, can we get in with these foreclosures?" So I want to show you some of the numbers. The top 5 counties have foreclosure right now is Humboldt, Plumas, Calaveras, Mendocino, and Kings counties. And Santa Clara County, as you see, comparing is we have 1 in every 25,000 homes. San Mateo County is 1 in every 34,000. Contra Costa is 1 in every 17,000. Marin County is 1 in every 16,000. Alameda, 1 in every 14,000. And San Joaquin is a bit higher in 1 in every 8,250 housing units. So as you can see that our numbers here are not that bad at all. And what about here, that the interest rate, again, just this chart, just want to let you see visually how we are as historical low right now, 30 years. We are absolute historical low. I mean, since 2011, but even before that, 2007, 2008, we were doing 6-7%, 30 years at the time. And Freddie Mac, their forecast is that continue to stay around 3 for 2021, and home sales is going to stay pretty strong, and the growth percentage is about 2.6 in 2021. So here is Fannie Mae. Their prediction is that the 30 years fixed rate here until 2022 is actually 2.9, and 5 years adjustable rate is 2.7. And then I'm just thinking, if only 20 basis point, why wouldn't you go to 30 years instead of 5 years? And also, again, their median home price is still continuing to go up in their forecast. And also the housing units, we have a very moderate growth. What about multifamily? Multifamily in December, we actually have 75.4% of rent payment that's being made on time, and it is actually lower than last month. And as you see, that 75.4 is lower than pre-COVID time. But what I realized is that because it's tracking from December 1 to December 6, so that's Tuesday through Friday, these are weekends. So that's why, it's definitely, of course, it's lower. If they have included a few more days here, probably we can see a little bit higher number. But in November, at the end of November, when they looked at the rent payment, at the time, it was actually 90.3% as of November 20th. Now, here's the CBRE research on real estate market outlook 2020, and by Richard Barkham. He is the global chief economist. And what he was saying is that, the 2019 rent control legislation that really actually hurting the markets, and is not the answer for housing affordability issue, but increased housing supply is. So as you see that we have some pretty strict rent control legislation in New York, California, and Oregon. And we continue to see that the more stricter the rent control in those areas, their rent actually historically had gone up the most. So what he also says that buying or building in the suburbs will remain the best bet based on market performance and investment returns. Suburban multifamily will outperform urban, and maintaining lower vacancy, achieving higher rent growth. So if you're looking for investment property, it is a good time to look in the suburb area. And then Marcus and Millichap also have some San Jose market report, and they do believe that San Jose actually will lead the comeback after this health crisis. However, the changes in tax law, they actually been denied by voters supporting investment activity. For example, Proposition 21 and Proposition 15, they denied the more rent control. And then Prop 15 actually is that if they had passed this would have taxed most of the commercial properties at the market rate rather than purchase price, which will actually in turn to cause a lot of consumer products to increase in prices. All right, so again, we talked about housing shortage. We are still 441,000 short in our housing unit in the San Francisco Bay Area. These charts, actually, we talked about it last month, and we talked about how our treasury, we had increased the money supply, plus the lower interest rate until 2021. It will cause the dollar to be weaker, but that's also the reason why we have more people demand for real assets. And in terms of foreign investments, because of the weaker dollar, and relatively speaking, U.S. still a much more stable investments compared to other countries. We are going to see foreign investment increase. This was from last month's slide, but I want to share with you this article I just found, and which was after my presentation last month. It says foreign investors poised to flood U.S. real estate markets, and there's huge pent-up demand among wealthy foreigners to buy property in New York, Los Angeles, San Francisco, and other cities. And some people began calling their money managers as soon as Joe Biden's victory was announced. So I know Joe Biden, his winning has caused a lot of people wonder what is going to happen, because one of the biggest things that he had proposed, obviously, is these tax proposals changes. So that's why I thought today would be a great time to invite my good friend, Tim Tikalsky, who is a CPA and a CCIM. He is a tax principal at Sensabaugh San Filippo. Thank you so much for watching our YouTube channel. And don't forget to subscribe to our channel, like our videos, make some comments, because we're going to keep you posted on the most updated real estate news, housing market data, and also real estate tips and advice from all over the real estate industry. So thank you so much for watching, and I'll see you next time.